last night, the AUDNZD bearish pennant or wedge. It was quite a nice setup. I was in the room for a while, and then I said to whoever's in there, I said, close this candle, looks like a good entry. It came back. This is a 30-minute chart. Remember I said you can look at the 30. Both the 1 hour and 30 gave good entries, but it broke out early in the piece. It retraced, picture perfect. We had a fib level there, and then it shorted. You could either take the candlestick pattern that I did, or you could do a crossover stochastic, which happened at the same time. Let me just expand that. The stochastic crossed over on the same candle. So it gave double confirmation. I took it on a railway track style entry, so equal real bodies is a reversal pattern. Like I said, if you line up the stochastic, it crossed over. At the open of the next bar, it was crossed, so that was your entry there. Target was down here at the 100% expansion. It tagged the 618. Now remember last week, might have been the week before, we talked about once it hits the 618, which it tagged it here, you can move your stop to break even if you want to. You don't have to, but that's a good level to do it. Now you can see that it retraced. My TFX has lost data in here, so I don't know exactly what occurred in here, but I was still in the trade when I got up this morning, and it was about an hour after market close, and I just closed my trade out. It got down here. It reached, my target was 134. I got to about 124, 125 pips. By the time I pressed the button, I lost about 6 pips on the way back up, no big deal. And I netted 119 pips. Now obviously if you stayed in that trade, it would have limited out on that news just now. I don't like to stay in them much past market close. In the morning in the US, I like to get up in the morning. If I'm still in, I'll say, well, there's your volatile session's gone, I'm out of there, happy. So that was a nice 119 pips, and I had a 30 pip stop, which was plenty. It was only like 23 pips to the swing high with an extra 7 left over, so my stop was well and truly up here. 30 pip stop. That's practically a 1 to 4 risk to reward trade. That's why we trade these things. That's really good trading. You know, so if you risk 1% for your stop, for your risk, you've just made a return of 4% on one trade. Now that's half a month's profit. That's fantastic. So you don't need many of these trades to put the good money away. There you go, Merv, spot on. I always do that. I always go just shy of the 100% level. I just go shy of the 100% for my targets, but in this case I didn't go shy enough. So if you limit it out, that's perfect. Job well done. On the 1 hour, Shane? Yeah, on the 1 hour, it gave a doji and then a nice big definite candle to get in. No, don't worry about that, Merv. What you're doing is you're refining your strategy. You're getting better at it. So as you get better and put the money away, you'll increase your lots. When you'll take ownership of it. You're like, okay, I can see your target, Adam, but I like to pull it back 10 pips or whatever. That's fine. Whatever floats your boat. You know what I mean? Whatever works for you, that's great.